Let's get some analysis. Chris Weston joins us from IG in Melbourne now. Chris, what did you make of this recovery? I mean, clawing back some of the losses, it must be said. How are you sort of taking the bounce back in equities?
Are you just talking about the
US
global
equities
markets?
Yeah.
Oh, okay. No, I think it was good. It was a good session. I mean, we've seen for so long where the perception is we could have had really good news, and that could have been really bad for equities because it obviously lowers the prospect for stimulus. But what we now know is we know firmly that the Fed are looking to taper, and that's obviously a good thing for me. I believe that the market should be looking to stand, or the economy should be looking to stand on its own 2 feet, and therefore it was positive to see bond yields moving up. We saw them trade from 247 in our time zone, 2.47%. Up to around 261 again. So, we did see a big sell-off again in the bond market, whilst equities obviously picked up the low. So we did see that selling through bonds and people obviously flocking back into the equity market. Whether that was pure rotation or where people came out of the bond market and went back into cash, I don't know. But certainly the data we saw from the US was really good, actually, to be honest, really strong indeed. I mean, the consumer confidence numbers, the highest for a number of years, but they are still, that consumer confidence reading is still 27% below the highs that we saw back in the peak in 2007. So there's still some upside there for the consumer in terms of their confidence side of things. New home sales were better than expected. Again, that's a very good situation, but we need to take that with a pinch of salt. It does factor in the rise that we saw in the US bond market and subsequent rise in mortgage rates through the May period, but it hasn't factored in the big spike up that we've seen in the back end of the June period as well. So that's really going to be interesting to see new home sales, pending home sales, once factoring in this big rise we've seen in bond markets, and obviously the 1 year high now we're seeing in mortgage rates in the US as well. So you can also look at the durable goods numbers. They beat expectations, largely thanks to the numbers that we saw in terms of plain orders. They were obviously expected to be quite good as well. So I think the data in the US was really good last night, and then that saw bond yields moving higher as people sold out, and we saw equities bid up as well. So that was obviously pretty positive to see.
And Chris, I mean, as you sort of pointed to there, the fact that the good economic data, better than expected economic data, was taken as good news rather than as, worries about, well, the Fed's going to start easing back then on the stimulus sooner rather than later. Is that a sign to you that perhaps the market's really priced in now, Fed tapering?
Well, I mean, obviously we look at the bond market very closely in terms of tapering, because that for me is exactly what you need to be looking at. That seems to be driving everything at the moment. That is the epicentre of global capital markets, and I think at where we are at the moment, 2.6%, I really do think that the market's factored in tapering by to finish at the mid 2014. And the cynic in me suggests that the Fed's projections are still quite optimistic. They're looking for growth at 3.25, which is the midpoint of their projections for next year, and that's still pretty optimistic compared to where most people see that unemployment coming down to 7%, which is where they want to finish their QE exercise as well. So, hopefully we need to, for that exercise to finish, we need to see the economic data being stronger. Now, the data last night was stronger. But I don't really think you can read through too much in the home sales. I don't think you can read too much in the durable goods numbers into the tapering debate, to be honest. It's all about inflation. It's all about employment now for me in that regard. So the non-farm payrolls is the key. But yeah, I think at 2.6%, I think that we're certainly getting above where most strategists see the year-end target for their 10-year assumption. That includes the tapering debate. So, I think probably a move back down to about 2.4% would certainly be warranted. A couple of days ago, we did see a big indecision on the sort of candles. If you look at the technicals there, and perhaps a move back down to the uptrend, which has been in place since around February or March, so around 2.22% would be a good situation for markets. So I think at these levels they are looking a bit rich, and I think if you are a fixed income trader, over the next couple of days we've got a 5-year bond auction and a 7-year bond auction coming in the US, and really good strong demand in that would be very, very positive indeed, because it would show that the levels that we're seeing probably in the mid part of the curve are starting to become more compelling to longer term fixed income investors there.
Just on China too, because we saw yesterday authorities come out and try and allay some of the concerns surrounding fears of a credit squeeze. What are your expectations given the way Chinese shares performed yesterday after that?
Yeah, well, I mean, all it was yesterday was a rumour, to be honest, Bridie. I mean, just after lunch, their lunch, there was a rumour that there was going to be a press conference, and we saw markets go, pretty much bananas, to use a horrible phrase, but they just went, they headed up. I mean, what you saw, the A50 is one I look at very closely. This is the top 50 stocks in China, where the futures market's is in Singapore, so foreigners can basically still trade the futures there. That was up 6.7% from the lows into the close, and you can have a look at the Shanghai Composite, which of course is the one that everyone likes to talk about, but no one actually really likes to trade, and you can't trade it, to be honest. That was up 7 or nearly 6% into the close, and the Hang Seng and all the H shares market, all 6 or 7% rallies into the close. So I'd expect to see that momentum continue when those markets open, and probably the best gauge for that will be at quarter past 11, when we see these futures markets for the A50, the H shares, the Hang Seng all open for the futures market, and then the cash market opens quarter of an hour later at 11:30. But of course, it's the rates markets that everyone's going to be looking at: the 7-day, the overnight repo, those kind of bits and pieces, the short-term money markets, the SHIBOR, those indices, those repos and short-term money markets open at 11 o'clock. So I'd expect to see a continuation of what we saw to the back end of yesterday, which is those rates coming off, and the PBOC are quite happy in my mind to see elevated yields across the suite of fixed income products there, money market products. I still think that they want to keep an elevated amount because to keep this expansion of credit at bay. But I just think they want to alleviate the huge volatility we've been seeing. I mean, if you look at the 7-day, we've been seeing that trading from 28% down to 4 or 5% over the last 3 or 4 days, and those kind of moves just can't happen. It's going to create huge stress in the funding markets. They're happy, as I say, to keep them elevated, given the huge spike we've been seeing over the last week in some of the shadow banking committees' issuance of high wealth management products, and with yields up to about 6% there. So, I think they want to keep them elevated to curb this credit expansion, but they just want to smooth out the volatility. And the soothing words that they came out of last night should see the repo market open a bit lower today, and then the equity markets open higher when the futures market opens at 11:15 today.
Okay, we'll be watching that closely. Just in terms of the currency markets, were you surprised the Aussie held up pretty well overnight?
Yeah, look, I think You've got two forces at play here. I mean, of course, on one side you've got US yields moving higher on the back of that better than expected data. That should really benefit the US dollar. But as you say, it's trading in a range of 92 up to 93, and for me, I mean, it's all about positioning now, Bridie. I mean, we've across different suites of metrics. You've got internal positionings across all the different investment banks. You've got that in the futures market with the Commitment of Traders report. Our internal flows on the retail side of things across the world. Everyone's short. Every man and his dog has got a short position on the Aussie dollar at the moment, and from that side of things, a short squeeze needs to happen. So you've got this conflicting two-way trade between a stronger Chinese equity market, a stronger or lower repo market, and alleviation of some of those credit concerns, which is obviously helping the Aussie dollar. But they've also got the positioning against the backdrop of higher yields on the US Treasury, which is obviously making the US dollar compelling, and that's why we're seeing that range of 92, 93 play out. So just a sideways trade for me in the short term here.
What about the yen? What's your outlook for that in the near term?
Well, I think the really positive thing about the dollar yen, if we look at the dollar yen now, if you look at the differential between where different US Treasury yields are, 5, 10, 7, all the different maturities there, against where JGBs are, it certainly favours a higher dollar yen. The carry trade there for Japanese investors, very, very positive now. There's a significant spike up in US Treasury yields relative to JGB yields. So that higher Treasury, very, very compelling to hold US dollars in that regard. And that's why I think we're going to see dollar yen continue to push higher in the short term as we see that yield advantage move back in favour of the US Treasuries. Now, the last 3 weeks in a row, we have seen big outflows of Japanese investors taking the money out of foreign bonds and foreign equities and repatriating that money home, and that's why the yen's strengthened a little bit. So this Thursday we get to see those flows of what they've actually been doing. It's a really good, transparent exercise that the Ministry of Finance conduct. And I think this week there's a good chance we're actually going to start seeing Japanese investors, Japanese insurance companies look to actually go out and buy US Treasuries again and create outflows which will weaken the yen. So that's something I'm going to look out for. But that yield advantage now between US Treasuries and JGBs, which have stayed around 86 basis points, they haven't moved up with the global yield sell-off we've been seeing, is certainly favouring a higher dollar yen now.
Just finally wanted to ask for your opening calls then for the ASX 200.
Yeah, it's going to be a good day, to be honest, Bridie. I mean, that's pretty obvious to see, but we're going to see a move above 4,700 on the market today. So, that's a gain of just over 1%. I mean, everything looks pretty good today, with the exception of iron ore, which is down 2.2%, and gold, which was down about 0.4% from yesterday's close. And, if you look at stocks like Newmont and Barrick in the US, Barrick I think was down a touch. So there may be a little bit of stress on Newcrest again today. I think that the ADR was pointing down about 5 cents, but that's going to be made up in the banks. The banks will be strong performers today, as will BHP. BHP was up 1.9% on its ADR. Strong days for Rio in its London listing, well over 2% as well. So materials may do in certain pockets, certain areas may do quite well, but it's going to be the bank stocks today which are going to be the star performers in my mind, and that's why the market will be hoping to push above that 4,700 level. And of course, as I say, Japanese markets may be good today as well, and it's really about China. So 11:15 futures open, 11:30 the cash markets open across the different markets there. And hopefully we're going to see a really, really strong day's trade in China, which will see us, close above that 4,700 level.
Yeah, absolutely. Chris, look forward to talking to you throughout the day as we watch all of that unfold. Thanks so much.
Thanks, Bridie. Cheers.
Chris Weston there from IG. Stay with